So what does Newton's law of motion have to do with the stock market? Well, we're going to explore that. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. As most of you probably remember from grade school, Newton's first law of motion, basically objects that are in motion stay in motion until basically getting knocked off of motion. So it takes some opposing force to knock that off. So yeah, I think there's a lot to be said about that relative to the stock market. So you've got the S&P 500 here, and it's just, again, you can look at short-term trends, you can look at mid-range trends, and you can look at longer-term trends. But this is certainly a trend that's been heading up, and there hasn't been a whole lot lately that's knocked it off of its course. Now we are overbought here, so if we look at the S&P 500, we've got an overbought reading over here, circled in the pink, the top pink here. And if we look at our adjusted trend lines, you can see that we're knocking on the door of a really kind of the top end of this particular trend. And so I would say that there's probably a little bit more downside risk at this point than there is upside reward for the short term, I would say. And again, we don't know if this will roll all the way back down to the lower end of this trend, or if it's just going to find some support at one of these moving averages, or possibly this uptrend on the red line. Either way, we're going to be watching it closely. Now, there is kind of a potential for a blow off top here, where everybody gets super excited about the market and just kind of goes all in. And that a lot of times can mark the end of a short-term trend. So we're watching that closely. You did have a gap up here to this upper trend line, so we'll see if it can hold this gap. A lot of times gaps are filled, so if it comes down and fills that gap and finds support and keeps going up, that would be great. But if it rolls over and can't hold some of these levels of support, then probably time to maybe take a little bit off the table. So we're watching that closely. All right, if we look at the put-call ratio of the S&P 500, it's really a measure of fear, versus optimism. And right now we're stuck right in the middle. So if you can see that, looking back a few years here, you can see that there are great times to be buying stocks, and that's usually when the fear is really, really high. And there's times that might be a little optimistic in setting itself up for a drop at some point. So here we are right in the middle. Volatility, or the VIX, is very, very low. So oftentimes you get low readings before kind of an extreme situation. So we'll be seeing, we'll be watching the VIX to see if it elevates at all. And then we've got the stock market that's just Newton's law of motion. It's just climbing. So there hasn't been much to knock it off yet. So again, we're watching for what that next situation will be that will pull the stocks down a little bit. Now, if we take a look at the NASDAQ, you can see it as well is overbought. So again, I think that we've had a nice run in the market here, and there's again just a lot of extreme kind of optimism in some pockets of the market. Certainly technology, semiconductors, NVIDIA, some of those types of large tech companies, there's been a lot of bullishness around. So, we do anticipate some sort of a pullback. Stocks just don't go straight up forever. So, again, we're watching for that level. Now, one thing interesting about the NASDAQ, and I believe the same thing holds true with the S&P 500, but, a lot of times we look at the health of a particular index, and we want to see a broad participation of companies pulling that index up. And right now you can see that with the NASDAQ, basically screaming upwards, and all new highs now, there's a low level of participation. So 60% of the companies are under their 50-day moving average. And the same goes with the 200-day moving average. So you're seeing higher highs in the NASDAQ. However, you're seeing less and less companies participate in that. And again, that oftentimes can be associated with a market that's just poised for a setback. So again, going back to Newton's law of motion, it just takes one thing to kind of knock the stock market off of its trajectory. So we don't know what that will be, but there are several things that are kind of setting themselves up to make that situation kind of ripe. So, we want to be very careful and cautious as we continue on into the summer with the stock market. So at this point, we won't know what will knock the stock market off of its trajectory, but at some point something will. And, I think that's the important thing of really monitoring the technicals and understanding the supports and resistance associated with various trends. So, we'll continue to watch that for you. But if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.